This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you regularly with short business episodes, short private equity episodes, interviews with brilliant private equity and business leaders, and a lot more. We're joined today by Rick Kes of RSM. RSM, sort of the leading middle market private equity firm in terms of consulting, audit, and more. Rick, tell us what you're watching currently. What's top of mind currently in the private equity world?
Obviously, we kind of watch the same kind of key indications for a long time. Interest rates, jobs, inflation are probably the things that kind of drive deal activity the most. So we're all kind of waiting to see what happens with an interest rate. But, what I think we're seeing, surprisingly, in the last couple of weeks, just a lot more discussion about some of the platform transactions that occurred last year, really looking hard to push to get some deals closed by the end of this year for some of their first bolt-ons. So, I think the deal activity that we've seen just anecdotally through just client conversations and, kind of real-time dialogue with investment banks is, I do think that, at least in the core middle market that we're working in, we're seeing at least more dialogue about trying to get deals done before the end of this calendar year. And, I think some of it's driving behind, obviously going through an election period and some of those other things, but also just, hopes that interest rates kind of do come down a little bit, but, not banking on that solely. But I think, some of those transactions that occurred, some of those larger kind of enterprise-wide transactions that occurred last year, to start building platforms. I think some of those bolt-on transactions that we're hoping for are actually going to hopefully come together, assuming the sellers are kind of ready and willing to go at the prices that the buyers are, making.
Yes, no, and it's fascinating. There seems to be some pressure on both sides of the table, not so much from founder sellers, but from sellers that are owned by private equity already. And many of these investments were made 2019, 2018, et cetera, very much seeing limited partners wanting to see some transactions happen and some distributions come back. And of course, the great fear is that distributions come back at less than what people invested in stuff. And so that's the fear. The flip side is there is pressure to move those along, especially as funds try and deploy their next set of funds or next set of capital and be in business. And then you do have platforms that are you could eke out growth through operational efficiencies or sometimes through serious organic growth, but nothing gets there faster than bolt-ons in the right environment. So your point on people that bought platforms trying to find a way to do bolt-on deals, because nothing accelerates growth quicker than that, even organic can have a better ROI. The bolt-ons move along the game quicker if done right. And so I think your point on that is well taken. I mean, you're seeing an uptick in deal activity. We say the bolt-on activity is still cautious. What's your sense of that? I mean, we're seeing across the board, you've had an uptick this year versus last year in deal activity. And it seems the first hint of interest rate cuts are coming, and that seems to energize the private equity world too. Any thoughts there, Rick?
Yeah, no, I think the hints are being heard, obviously, and people are starting to get a little bit more kind of anxious in terms of trying to get things done. I think to your point, that churn cycle that, the investments made in 2019, 2020, that LPs are kind of putting that pressure on. I think that's a real thing that we hear from our clients routinely. And I think the other thing that, people continue to kind of, try to focus on is just the overall stability of the economy. I mean, jobs have been pretty stable. Inflation has come down from, probably the 9s and 10% that we were worried about last year. So I think the economy overall has been really, really stable and pretty productive. And so I think, just depending on the sectors that, the private equity investors are looking to invest in, most sectors are pretty lucrative at this point in time and have opportunity for growth. And I think have a lot of optimism just because of the strength of the overall economy, the strength of the U.S. consumer. I mean, obviously there's some data points out there that kind of kind of put some of that at question, whether we're talking about, credit card spending or some of these other things that kind of give you some cautiousness, especially if you're focused on maybe, the middle income earners or below. But, depending on, again, sector specific, deals, I think there's a lot of sectors that have a lot of optimism, a lot of opportunity for growth. And I think there's, a lot of people out there trying to find those little, opportunities and really flourish in them.
No, I think that's right. And what you said about LPs want to start seeing some of their money back as they start getting capital calls on their next investment. So you do see that pressure to start to see some of those things liquidated, even if not at great prices, or sold, not even at transaction, even if not at the ideal price that people were hoping for, because nothing an LP likes worse than putting more money in while the house is still holding the money.
Yeah. Well, and 10% better than 0%, right? So I mean, I think, if your return is still good, maybe it isn't as good as you thought. Maybe you thought you were going to get 20 and you're going to settle for something less than that. I mean, I think you're still, have to be a little bit, thoughtful around that churn cycle and just understanding of where we're at in the deal environment today. And maybe you're, selling at a low market today, but buying at a low market, hopefully too, and then you'll be able to sell, in 5 years, and hopefully we'll be in the inverse, right?
No, I think that's exactly right. And I think many LPs be happy to see some returns, some positive returns. Nobody's expecting great returns out of the 2020, 2021 cycle of investment, but hoping for some returns, or whatever the vintage is, 19 to 21. Happy to get through this and get your money back and reinvest and hope that the next cycle's better. I think there's a lot of that thinking.
Yep. Yep, for sure.
Rick, anything else that's top of mind there at RSM that you're thinking of, top of mind, that you're watching?
Not significantly. Again, we spend a lot of time trying to figure out what will happen with interest rates. Obviously, we look at jobs reports a lot. We look at things related to wages and where they're going, consumer spending, because those are all obviously the data points that the Fed is looking at when they're making those decisions. So, again, we continue to think that there's, an overall likelihood that rates will come down some in 2024. How much, how often, a little hard to say yet, but yeah, we're still optimistic about rate cuts in the current year. And I think, obviously, we hope that those will continue in 2025 and that they'll continue to fuel the investors, that we work with, and, kind of help us fuel our business.
Thank you. It sure seems like it's getting closer to rate cut time, and you could feel sort of that palpable starting to move the needle in terms of private equity interest in doing deals. So let's hope that's the case. Again, we're with Rick Kes today on the Becker Private Equity and Business Podcast. Rick's one of the leaders at RSM. He's one of our most listened to guests regularly. He says it how he sees it. Rick, thank you for joining us today on the Becker Private Equity and Business Podcast.
Of course. Thanks for having me, Scott.